Throughout the presentation, your microphones will be muted. However, at the end, there is plenty of time to do a question and answers if you have anything to follow up on. There might be some other things that you want to chat with us after this event, so you can contact us directly as well. So without further ado, we will start. The agenda, we're going to tell you a little bit about the mortgage quarter, just a little brief history of where we've come from. Jared's going to run through 10 steps of buying a home. There's lots of things to take on board when you're buying your first home, so we thought we'd pinpoint some of the major parts of that. One of the biggest questions we get asked is borrowing potential. How much can I borrow? We might not have that definitive answer tonight, but we'll definitely tell you what can be used in affordability checks. Lots of news out at the moment about help for first-time buyers, and some really big news that's come out Friday, which is that new. It's not even on our presentation this evening, but we're going to tell you about some schemes that can help. Gerard will also have a part in on that, and then we'll do the question and answers. So, how did it all start, and where have the mortgage quarter come from? We've been going for a few years now, so Mick's going to tell you a little bit more about that, and we've helped many first-time buyers in the past. So, Michael, over to you. Do you want to tell us a bit more about the mortgage quarter?
Good evening, everyone. So, yeah, I'm Michael, or Mick, whichever takes your fancy. So, yeah, James and I started the mortgage quarter, coming up 6.5 years ago. We'd worked for one of the big banks, funnily enough, Lloyds Banking Group, and we just wanted to do things a little bit differently. So we kind of moved away from working in branches and decided we were going to do it ourselves by putting clients first. So exactly as you can see in front of you, back to basics, client comes first, nice and straightforward. What we've subsequently done is spent all of our time becoming specialists across the board, which I know that there's an old saying, jack of all trades, master of none, but we have a big enough team now that we genuinely have got people who are specialists in each and every area. So that is what we do. And I would be surprised if you could come at us with a problem that we can't solve. Which again, obviously leads on to everything you can see in front of you. So most importantly, what I always like to point out is when we say our clients come first, I'd like to think our Google reviews do a lot of the talking for us. Ultimately, that's what we care about. We care about what our clients think of us and why they want to come back, why they keep recommending us. For all of the business relationships James and I have built over the years, we get more people come to us from recommendations, which I like to think is exactly how business should be done. So, really chuffed with that. We have won multiple awards, which is wonderful. And it sounds like we're trying to blow our own trumpets, but hopefully it means we're doing something right, and by putting the client first, that's why we keep getting given them, which is wonderful. But yeah, so it's more than just mortgages. We are here to support our local community, not just local. We try and support kind of any charity that we can, and ultimately we're here to support our clients, charities, local area, and further afield.
Mick, a big one there. So we're obviously mortgage brokers now, rather than working for one bank. Do you want to just explain the difference of using a broker compared to going to your bank?
No, so it's a good point. So we have access to a very wide panel of lenders. So it's one of the biggest in the UK. In fact, it may be the biggest, but I can't say that for certain. So take that with a pinch of salt. So we can effectively, from behind our desk, we use our knowledge and experience and everything we've learned over the years to know who we can place you with. Now that could be anything up to 120, maybe more, maybe less lenders. Now, if you walk down your average high street, how many lenders could you actually think of? So pick them at random, but Santander, Nationwide, Halifax, Lloyds. You think of how many banks you can actually think of walking down your high street, and we have access to over 100, all from behind our laptop and just based on our knowledge. So that's why you would come see a broker when you're not sure what you can do, how much you can borrow, or if you think your income might be a little bit unusual, which I know we'll touch on a bit later. So lots of reasons to come and see someone like ourselves.
Yeah, I think that's the big thing, isn't it? Giving giving our clients choice, making it easier. And we always say there's no obligation, is there, for talking to us?
None
So
at
we're
all.
always happy to pick the phone up, aren't we?
Very much so. So we're here to support people. And it like might not be that we do your mortgage there and then, but we always like to think we'll point you in the right direction.
Yeah, thanks for that, Mick. So we always like to start off. There's quite a few obstacles. Some people can be quite worried about the home buying process. There's lots to take on, but there's a lot of help that you can get as well. So Gerard, I'm going to load up just an illustration after this one, but just want to introduce yourself a little bit and yeah, take us through the next part.
Well, thanks, James and Mick, for inviting me onto this. Yeah, my name's Gerard. I'm a business development manager with Halifax Intermediaries, which means that I look after the relationship between mortgage brokers like Mick and James and us as a bank. I'm 24 years in on Friday, so been around the block a few times, and I love doing stuff like this because actually, whether it's you go with Halifax, whether it's Santander, whoever it is, using a broker I think is a really fundamental piece of the home buying journey, and it means you can get a really balanced view of what's out there. Yes, I work for Halifax, but this stuff that I'm going to be talking about is whether or not you go with Halifax or whoever the right lender is when you're looking to buy a property. They will put you in the right place, and that might not be us, but happy to support. Do you want to move it on? Yeah, brilliant. So there's 10 steps. Some of them I'm going to go through in a bit more detail, and some James and Mick will expand on. I think the biggest thing from a lender's point of view that we like, and most lenders will like, is making sure that they know who they're dealing with and what they're dealing with. So things like how much can I borrow? That's based on how much you earn, but it's almost also based on things like your credit score. So if you haven't got a credit file, something like Check My File, which is what we call a multi-agency report, which will cover all three of the main credit reference agencies, to see how your credit profile is looked at from externally. With that, you can see if you've got a couple of £100 on a credit card, actually, is it worth paying that off and getting rid of it? And before you start the process of looking to buy a house, cleaning up your finances, a few £100 here or there could make a bit of a difference. So cleaning them up and making sure everything is good, having a really concise and detailed knowledge of your address history for the last 3 to 6 years is really useful for a mortgage broker to understand, and will make sure that they get the right information up front. The cost of buying, if you're a first-time buyer, and Mick and James, what's the stamp duty threshold now?
300,000, no tax on stamp duty. So any property under that, you don't pay any tax. If it's higher than 300,000, there will be some tax to be paid.
So there's lots of things to consider in the cost of buying a home. Predominantly, you're going to have solicitors to pay for, or conveyancers who are going to do the legal work to make sure that the person selling the house has got the right to sell it, and that you're buying the property that's been advertised in the right way. You might have survey costs of someone going out to make sure, a bit like having a car MOT, to make sure that it's actually fit for you to buy. There could be brokerage fees or lender fees, but you're, again, without sounding too cheesy, a mortgage broker that's worth their salt will be going through this with you and explaining all the way through how much things are going to cost, and giving you a breakdown.
Gerard, I think just on that point, because there's lots of fees to consider, isn't there? So initially, when we do meet someone, that's a big part of that first conversation, is to estimate what the cost will be. We've got partners that we work with that can help with how much legal cost will be, how much the survey will be. And also you did mention Check My File, which is a great tool to be using because it is checking Experian, Equifax and Call Credit. Which ones do Halifax use?
We use all three. Yeah, we
use all three. Yeah.
We use Experian, Equifax and TransUnion, which, to be fair, they all hold pretty similar information. Sometimes there's a little bit of a difference, which is why it's best to get a multi-agency rather than just drilling down on like one individual report. But just to make sure you're covering all your bases, really. Yep.
Yeah, great. Thanks.
When you start looking for properties, there's loads of things to consider on that, and that's such a personal thing. You know what type of property you'll be looking at, but the biggest thing that a broker will do in the mortgage industry do is say, actually, how much can you borrow to look at actually being in the right position. So you go out looking at the properties that you can afford rather than necessarily ones that are outside of your price range. Mick, James, and any mortgage broker, I would always class a mortgage broker as being the hub of the wheel. They will hold all of the spokes in one place. So if you need anything, helping negotiate prices with estate agents, I've even had, and I'm not saying Mick and James will do this, but I've had brokers that will do viewings with people if they're nervous, just to help them understand what's been happening, what to look out for. But they'll talk you through maybe virtually what can you look out for, making sure looking for damp spots in corners of buildings, things like that. Things that when you're first going out and looking at your property, to have really consider. Paperwork. If it's one thing that you get good at as a mortgage broker or working in the mortgage industry, it's paperwork. And that's where clients can really help their broker by making sure they've got all their paperwork in order. So things like pay slips and those boring things that you don't think about, like P60s that you get once a year from your job and you don't really do anything with, having them in a safe place that you can lay your hands on quickly so you can give them to your broker is really crucial. Survey or valuation on a property. So once you found a house and you've had your offer accepted and everything's getting exciting, you'll have the opportunity to do a survey or valuation. All lenders, I think, will want some type of valuation carried out on the property. The more detail you want, it will cost you a little bit more, but in the grand scheme of things, actually sometimes paying a little bit more for your survey will mean that you'll get more detail and you'll know what you're actually buying.
We've actually seen on the more detailed surveys as well, if there's an issue comes up, there's a great opportunity to approach that vendor that you're buying the house from. Absolutely. And either renegotiate and maybe get a slightly reduction on the property, or get a professional out to look at it in more detail and get that problem fixed. So absolutely. The house is, I suppose, ready to go for you.
So once everything is done, once all the paperwork's collated, a lender will then give you a formal mortgage offer that says, absolutely, this is how much money we're going to lend you, this is how much it's going to cost. You'll move on from that to finalise the purchase arrangements. So you'll be liaising with your conveyancer and your mortgage broker about when things are going to happen and what stage of the process are, and then get to 9, which is exchange of contracts. And exchange of contracts is when you are legally bound to buy that property. You're saying, yep, everything's in order. Conveyancer saying everything is in order. A lender's saying that everything is in order, and you're saying you want to go ahead. And then step 10, completion. The day you pick up the keys, which is probably the best part of the whole process. You need to be aware that maybe within the next 10 days, 2 weeks, you might have a little bit of a bill landing on your doorstep for your first monthly mortgage payment. However, it's your place that at least you're paying the payment for. All the way through that house buying process, I mean, there's so much to cover that we could spend 4 hours just talking about this. But the crucial thing is, if you don't know what the answer is, and even if you don't know what the question is, pick up the phone to your mortgage broker and have a conversation with them, because they will very definitely know it. When you've got, I deal with lots and lots of brokers, 125 firms and 600 individuals over the Southwest. I don't know any of them that won't be prepared to pick up the phone and have a conversation with their client, talking about where they're at, what they're doing, what does it mean, what do I do now? So, yeah, that's it. I mean, the biggest thing for a lender is very definitely making sure we know who you are, address history, getting on the voters roll, doing the things to clean up and protect your credit file, things like Klarnas or payday loans, losing those, and doing things that will mean that lenders are interested in not only how you conduct your finances in terms of how much money comes through your front door, it's your willingness to pay and your ability to pay. So your ability to pay is how much you're earning, and your willingness to pay is what you'll see on your credit file, and it's vitally important. Yep.
I think is that, Gerard, really? Sorry, I was to say, like, transparency, really, isn't it? From a lender's perspective,
Absolutely. Some of the questions we ask in our application process is about, have you ever had any arrears or defaults or county court judgments or been in arrears with any lending that you've ever had? Saying yes to those don't make a difference whether or not we'll do the case or not. But if you don't tell us about it and we find out about it, we very definitely don't like it. And most lenders are like that. They don't like things being hidden from them. So they're more open and transparent. And there's a lender out there for everybody.
I think that's the big one, isn't it? Even if you've had a blip on your credit history, a lot of people think, oh, I got to wait 6 years to apply for a mortgage or even have a credit before I can do that again. But that's absolutely not true. Going back to Michael, your point earlier about access to so many lenders, and yeah, we even have like high street lenders such as Halifax. You will accept people with certain blips on their credit in the past, won't you?
Yeah, absolutely. I think that's me. I'll turn off my mic and camera and let you guys carry on, and then come back in for Q&A if you want me.
Yeah, lovely.
Thank you, Gerard.
Thank you very much. So, Mick, I'm going to fly this one back to you. Probably the question we get asked the most, I would say. So, Mick, how much on a mortgage can I borrow?
Well, in theory, you can borrow £1 million, £2 million, £3 million. But
brilliant. Let me go get a house.
Yeah,
now.
exactly. Fantastic. Ultimately, there's so many factors that come down to that actually dictate what you can borrow, and that is what this is what we are here for. That's why we have those kind of open conversations. Why I said the transparency part is key. It's down to not necessarily what you do for a living. There's a big kind of a myth that, for example, self-employed people can't borrow as much as employed people. That's just not true. It's been out there for years, but it's not true. It's down to your income and your expenditure. It's probably the very overly simple way of me explaining it, which I believe on the next slide there is more information.
Yeah, so we thought, without knowing everyone's personal information, we'd run through the types of income that can be used and maybe the different types of contracts that are out there, because there's so many different job types, industries out there. It's not an exhaustive list, but Mick, I'll go through it and then you can sort of explain each one. So number one, probably the most common we come across, obviously.
Yep.
So we got.
So
go on, over to you, Mick.
So PAYE, so that is kind of anyone who is employed by a company. You can use basic salary and you can use also additions to pay. So that is things like overtime, commission, bonus.
Mate, I think a big one there as well. A lot of people we see, they tell us their net pay, don't they?
Yeah.
So
they think a lot of people come to us and go, I get paid £1,500 a month. And they think because that's what goes into their bank account, that's what a mortgage lender wants to know. Now, it's not what a mortgage broker wants to know. It's not what a mortgage lender wants to know. They want to see the gross overall figure and how it's broken down. So this is, again, where, without kind of obviously trying to say brokers are the best thing since sliced bread, but it is where we will obviously work out who's going to be best for you as a mortgage lender, because we know some lenders will take more income, so such as overtime, bonus or commission, where they will use 100% of it as long as you can prove that you're doing it consistently. Or
so give us an example.
Number 5 there.
I was just about to say on overtime, how do lenders look at overtime generally?
So you've got some lenders that will look at the last 3 months as an average and they'll go, yep, brilliant, there's £100, £200, £300. Right, well, we'll average that at £200 a month. We will put £2,400 on the overall salary additional and use that as income.
Right, and then I think Gerard mentioned it earlier, some will be looking at the P60 to make sure it's consistent as well, going over previous years.
Yeah, so making sure it looks consistent enough that they go, yep, that's more than feasible. Because ultimately a lender doesn't want to think, oh, they're doing it just for the mortgage. So, you want to see that you consistently are doing that level of overtime, for example.
Yeah, and you want to make sure it's secure when people actually start paying the mortgage as well. You were just about to go on to, and I've already clicked on it, but point 5 there, self-employed, quite a big one. a lot more people are going self-employed, and there's a few myths out there, which shouldn't be really. But yeah, do you want to explain how we can look at self-employed income?
Yeah, so again, there's always been, I think when James and I founded the Mortgage Quarter all those years ago, there was a misconception that you needed 3 years to be self-employed. Of recent times, people still think they say maybe 2 years, and therefore people think, well, that's unfair because, you know, if I was employed, it wouldn't take that long for me to subsequently get a mortgage. So self-employed, it is a fraction more difficult because getting a track record for your earnings, it is a little bit more difficult to prove, which is why you'll find that a year, though, is actually doable. Now, let's be honest, a year flies past before we all know it, and we can actually do mortgages with 1 year's accounts, not 2, not 3, as a lot of the myths say. And as long as, depending on obviously what those accounts say and a lot of other factors, there is every opportunity to use dividends, net profit, salary, which will mean something to you, of course, if you run your own business, be it as a sole trader or as a limited company director. So you can do that still with only 1 year's accounts.
Yeah, it's really important. And as they're on the call, Halifax support that in some scenarios as well. This one is, I suppose, more linked with the overtime bonus and commission, but shift allowance can be used on applications. So this tends to be a regular amount, doesn't it?
Yeah.
Because not everyone works 9 to 5 these days, as we're fully aware.
No, very true.
I'm I'll bring all these up now. So these are types of contracts that can be accepted on a mortgage application. Mate, I don't know what order you want to do it in, whether you take it 1 to 6, but I just wanted to focus on one about not enroll yet. Do you want to tell us a bit more about that? Because again, that's a bit of a myth that we can go over.
So I suppose that's almost similar to the self-employed thing, because a lot of people again think I have to have been working in that job for at least 3 months, have 3 months pay slips before I can apply for my mortgage. Absolutely not true. If you've got a future dated contract, so, you know, tonight we're at the 27th of February. So if it was the 27th of May, absolutely no problem. A lot of lenders are happy with a 3, sometimes even 6-month future dated contract, because they know that by the time the house process has gone through, you will have started your new role. So they're absolutely fine with a signed contract from your employer and from you, which is major because a lot of people don't know that.
Yeah, I think that's really good. We get that a lot, don't we, when people are moving up through their career or they get offered a promotion, then we can use those pay rises or new roles. Something that could be your main role or a second job, they're acceptable as well. But you've got things like 0-hour contracts, closely linked with the NHS bank and locum work, isn't it? That I guess that goes back to similar rules around self-employment. You probably want to see a good track record of those, but they can be used.
Yeah, that's when your P60 and your 3 to 6 to 12 months pay slips will show kind of a track record. But again, some people think you can't get a mortgage on a 0-hour contract. You can, as long as you can show that you've got the continuity and you're earning that money.
Yeah, really good. Lots of flexibility in the market. The fixed term contracts one there, that's very common now for some professions like teachers. They generally get
IT contracts. Yeah.
We got CIS contractors on there as well. So in the construction industry, we can use their invoices as a pay slip, which is really positive for them. And then number 6, just want to clear that one off there.
So again, we've got big high street lenders who will accept foreign income. So if you work for a company abroad, again, I think we know there is a bit of a myth where people think, they're not going to like it if it's paid in euros, dollars, all of, you can think about 100 different currencies, but they can be accepted again. But this is why having a broker who knows what they're looking for when you come to them is absolutely major, because we deal with foreign income mortgages all the time. It's not a concern because we know the lenders that are happy with it.
Yeah. So I suppose that's that in a nutshell, really. But how much you can borrow is mainly based on that income. We haven't really touched on outgoings as well, but that would be part of the process. But there's so much flexibility out there, and so many opportunities to borrow the amount, hopefully, you need to. I think that goes in line. So this next part here is about the support that's available out there for first-time buyers. Now, there's a few schemes that come and go, depending who's in government. And what budget is on the horizon coming up in April. So I'm going to bring up these schemes here. Shared ownership is a real big one for first-time buyers. Maybe can't afford a full purchase property or on lower incomes. Mick, just want to tell us a bit more about shared ownership?
Yeah, so
How it works.
again, it's quite a there's a lot to a shared ownership scheme, but ultimately you can't earn more than £80,000 either individually or as a couple. And what you do is you buy a percentage of the property. So minimum, I think it's still, oh no, I think it's just been reduced actually. I believe it's 20% now of a property that you can buy. And what you then do is rent the other, let's say it was 20%, you can rent the other 80% from the housing association with a view to, in a lot of scenarios, not everyone, but in most, that you can staircase and buy more of the property as the years go on, so that you no longer either have to pay rent to the housing association if you pay off the whole thing. But what it is, it's a hybrid model, if you like, of owning and renting your house. And generally speaking, if you look at the last couple of decades, it is cheaper than renting overall.
And generally, it's a good way of getting on the ladder. So we've seen a lot of first-time buyers come in on shared ownership, then they move on to a full purchase after because they can gain the profit in the property price if it goes up, but they're also reducing the mortgage balance, aren't they? Because they're repaying it. So good way of getting on the ladder. And I think it will become more and more popular over the next few years. The next one, not so well. Help to Buy is out there, but it's finished unless you are now in Wales. So it is available. There's talks of bringing it back, and that's where you get a bit of help from the government. But there is still the lifetime ISA out there, Mick. So that's like a savings plan, isn't it? Want to elaborate a little bit more on that? You get a bonus, don't you?
Yeah, so every April, they apply a 25% bonus. So it is fantastic. You can use your lifetime ISA towards either a home or your retirement. Now, as a first-time buyer, you're probably thinking my home's a little bit more kind of on the horizon than retirement. We won't go into retirement. That's probably a whole different kettle of fish. But yeah, as a first-time buyer, it's fantastic because you can get 25% bonus on everything you've saved, up to £4,000 a year, whilst getting £1,000 from the government. Now,
I'd say it's a great start, isn't it? Bit of a
fantastic.
No-brainer. Start saving into a lifetime ISA, isn't it?
Yeah, definitely.
Subject to your saving accounts that you've got, because you've got to make sure you qualify for it.
Yeah.
We put it on there. It's not so common, but resale price covenant. It's where some housing associations or councils can offer properties at a reduced price. So it may knock off 20 to 30% of a property price to make it more affordable for people that live in the area. Best way of finding out about them and shared ownership is probably contacting your local housing associations. So just find their details online. You can register your interest and come on to their mailing lists. And when you register, they will check that you qualify for their schemes. And I'm pretty sure there'll be some new schemes coming soon. So that's always some good advice to register with the local associations. Probably one of the most common ones we're coming across. Do you want to take this one away? It used to be called a guarantor mortgage. It's a little bit different. However, it's generally a similar answer, isn't it?
So it's literally a change of name, to be honest, but it's more stringent than it used to be. So joint borrower sole proprietor is where it's a very fancy way of saying you could have a family member jump on the mortgage with you to increase your affordability. There are lots of kind of ins and outs to a joint borrower sole proprietor mortgage or guarantor mortgage, but ultimately it is exactly that. So they can come onto the mortgage, help you with your affordability, but always worth noting their age will be taken into account, and also kind of any outgoings they may have. So it can be fantastic, and we've achieved some absolutely amazing things for people doing joint borrower sole proprietor mortgages, because what it also does means that you haven't got to pay the additional rate stamp duty for having someone who might already own a home on the mortgage. And that, of course, can be, well, it's 3% on top of whatever stamp duty you might have to pay. So if your property was £500,000, you'd have your normal stamp duty, and then you would have an additional £15,000 on top if you just had a joint mortgage with someone who already owned a house. But under joint borrower sole proprietor, that £15,000 wouldn't be charged. So it is a brilliant scheme.
Yeah, so ultimately, it can be friends as well now. We've got lenders that will do it, but I suppose the most common way is a family member backing up your mortgage, maybe getting to borrow a little bit more. If for some reason you struggled, they'd be liable for it. But it allows you to buy a property maybe that you can't reach right now, but you have a robust plan to take over in the future. Is the gist of it, yeah?
Yeah.
And the last one.
Was
a little,
so there's
because this is the attention grabbing one that we get asked about a lot, and there's schemes coming out daily at the minute for this.
So obviously people have probably seen some bits and pieces in the news. There's not much to be said about the old 1% mortgage yet. Want to make that very clear. Nothing's been kind of set in stone. So, but we will no doubt do another one of these where we explain that in more depth. But to some degree, where one lender or a couple of lenders have already beaten that and have got a 0% deposit mortgage. So you have actually got where if you've been renting for at least 12 months, one lender will go, well, as long as the new mortgage is less than your rent, we'll lend you the money. As long as what you're borrowing is cheaper than what your current rent is, and it could be literally by a penny, then that is completely acceptable. They will allow you to buy a property with no deposit whatsoever. So the only thing you'd have to find money for is your solicitor's costs, somewhere between £1,500 and £2,000, and you could own your home with no deposit. There's also another scheme by a smaller building society where you can use the collateral in one of, it's normally kind of first relative, so parents, brother, sister. You can use the collateral in their home, the equity in their home, to subsequently almost act as a deposit without physically putting it down. And they effectively are guaranteeing that mortgage by saying, well, we'll put up 20% of our house as a value. And you can also, so you can do it that way as well. So again, zero deposit, but your, family are effectively putting up that collateral in the background.
Yeah. So, these changes in the market, I suppose, are positive for first-time buyers. There are some drawbacks, but it's something that we can work out very quickly whether you will qualify for it or if you have any inquiries around it, because you also need to work out what the monthly payment is. Is there a property in your budget for that? But there's a lot of change coming up on low deposits, and it can only be a good thing because most borrowers think it's got to be a 10% deposit, but it doesn't. It can be lower. And there's a new scheme that's came out on Friday where not all the details have been released, but if you buy a new build, there is an incentive coming out where a builder can offer you cash back to help reduce your monthly payments if you buy a new build. Now, only Barratt have signed up to that at the minute, which no doubt the other nationals builders will sign up to, but that's definitely one to look out for, isn't it?
I think they're signing up by the hour, from what I checked today. So
cool. So just the last bit. Let's get mortgage ready. So we haven't written down the full list again, but we get asked quite a lot. Typically, what do I need to look at a mortgage to help us? So quite self-explanatory, I would hope. So we've already gone through scenarios where it's not the case. So if you're starting a new job, then obviously you won't have 3 months pay slips. But if you do, we always like to see your first 3 and your latest 3 months bank statements. So it's always good to understand, can you get on to online banking? Do you need to order them through the post? So it's getting ready and having those documents in place. Self-employed, whether you're a sole trader, we'd like to see your 2 latest tax returns, ideally. As we did say, you can get 1 year's. Or if it's a limited company, we probably want to see the latest 2 years full accounts. ID, we need to verify who you are. It's really important in our role to make sure we are dealing with the person we say we're dealing with when we are presenting it to a lender. So photographic ID is ideal. And then Mick, just want to talk a bit about I suppose proof of deposit, but the gifted deposit letter part as well, because that is very common. I forget where Bank of Mum and Dad actually fall in the largest lenders in the country, because it changes
Now, I
every year, but it's
think there
going
was
up.
yeah, I think they actually moved up to number 8. So Bank of Mum and Dad are now classed as the 8th biggest lender in the country, which is probably quite savage for some mortgage lenders to realise they're being outdone by Mum and Dad. But it is very true that I think just generally, obviously, everything, as far as housing's gone up, it has gone up in price, and people are who are very fortunate are being gifted kind of money from parents or kind of further family. So that could be grandparents, aunties, uncles, yeah, etc. So obviously savings, I think, is the classic that we all think of when people think of buying a home and saving money to subsequently put down as a deposit. But it is just as common, if not probably more common now, to see kind of family members helping out where they can and gifting, nieces, nephews, sons, daughters, kind of money to buy their home. And in those scenarios, not too dissimilar to what we would expect to see if you'd saved it, which would be something like 3 months bank statements from Auntie Sue, who's giving you some money, along with kind of the money being transferred across to yourself, just to prove, absolutely where the money's come from, and we've crossed every T and dotted every I, as it were.
Yeah, and I suppose a big one, if you are initially looking, you don't necessarily need to get that sorted before finding out your options, because you may have not had that agreed yet. So
no, and a lot of these things, as far as the paperwork is concerned, what we always say is, give us a call first, and obviously you might decide to go to another broker, sacrilege, but you could do so. But if you do decide to do that, then they will talk you through these things. You don't have to have your all of your paperwork together before you phone a mortgage broker, because that's what they're there for. They will talk you through these things, because your circumstances might not be as straightforward as that list you can see in front of you, but that is exactly what they're there for. If you are self-employed, or you think, well, actually I might have had a credit issue a couple of years ago, right, well, we might ask for a credit file to go alongside it, just so we can have a quick look, because we can go away and take that information before we've even done an official application, or you found a house. We can approach a mortgage lender and say, well, actually, we've got this from a couple of years ago. The reasoning behind it was this. Could be you were out the country. We've had a couple of those before. Someone was on holiday and missed a credit card payment, only blip on a credit file. But had we not known about it, the application would have been declined. So we told the lender in advance, and they went, fantastic, thanks for letting us know. I'm happy to proceed. So it's just making sure you have that conversation first, and you don't have to have everything ready at that moment in time just to have that conversation.
Oh, I think you've rounded up real nicely there, Mick. Yeah, important getting everything in place, but most importantly, yeah, talk to a professional, I suppose, is the best advice we can give. Oh, there it is, number 6.
And look at that, yeah.
There we go. We've come to the end. Questions and answers. Well, if anyone's got any questions, feel free to come off mute or enter it into the chat.
And one thing I was just going to very quickly mention, James earlier said about the stamp duty being at 300,000. They have actually changed that to 425 for first-time buyers. Wasn't long ago, but just wanted to make sure that had been kind of chucked out there, just in case you panicked if you thought I was just about ready to buy a house and the purchase price could have been affected. So just to let you know.
I think I'm wrong tax year there, aren't I? There you are.
You are, yes.
Yeah,
Sadly, that was last tax year.
So throwing it back, any questions in the room that anyone would like to ask? If there's not, we have obviously recorded this one, so we will be sending that out as well. We'd like to thank everyone for watching. Thank you, Gerard, for attending and giving us a perspective from the largest lender in the country.
Yeah.
And Mick, thank you to you. Even though I work with you every day.
I was going to say, it's always a pleasure, funnily enough. I know, thank you, Sheena. No, that's very kind to comment. So, but if anyone has any questions, please do feel free to email us at info@tmq.org.uk. We are always happy to answer questions. Even if it doesn't lead to you coming to us for a mortgage, we are genuinely here to help.
Lovely. Thank you very much, everyone. Have a good evening.
Everyone, take care.